Hello, Face Warriors. How's everyone doing today? Hello, Patrick, Kevin, Zig, everybody. Okay, I want to share with you how I use ForexAnalytix. Okay, everyone, when they get up in the morning, they have a routine or a ritual as to how they prepare for the trading day. So I'll get up in the morning and I already have some ideas from previous days of what I may be looking to do. Okay, like I talked about, I want to sell a US dollar yen rally at bid levels. I have had a few other ideas that I've discussed. So what I do is I trust what I see. Okay, we all have to learn to trust what we see. So I don't go right to ForexAnalytix right away. So I scan my charts. Then I go to ForexAnalytix. All right. Yeah, I've had a few cups, Sig. So I go to the traffic light page and I take a look at the patterns in play, because really these, although new convictions may build, these are the high conviction trades of the team. Okay, so I want to see what's going on, if we're close to invalidation, where the targets are. So that's where I'll start. If I don't have any ideas on these, you know, I'll pull up the chart, or I'll go to, I'll go to Blake and I'll take a look at the triangle that he's talking about. Everyone with me? So this is the first place I go. All right. Then what I'll do is I want to see what fresh ideas the team has come up with. All right. So here's where you find all of these. Okay, so I'll start going through here, and if I have a bias on a trade, I may take a look at what Blake is saying, or Nick, or Grega, or Steve, or Stell, and then I start going through their new updates. Okay, so the reason why I start this way, and I think it's a good idea for you guys as well, I mean, I hope that ForexAnalytix lasts until the end of time, but you don't want to become too dependent of, you want to be independent. So if your first notion is to go see what the team is doing, then you're not learning to trust what you see. So I suggest doing it this way instead of the other way, so that you're developing yourself as a trader. And ForexAnalytix is your intelligence gathering place, because, okay, good, Eric. So this is, just what I do. Okay, I've been doing this for, I think I'm in my 7th month here. So, and it took time to develop how I wanted to, use all these great tools that are at my fingertips and get the most out of it. And, if you're a decent trader, which, I don't consider myself a messiah, but, if I've been able to teach others to make money in the market, I must know a couple things. So I want you guys to really concentrate on your own work, and then use this as your intelligence gathering, your sounding board on your own ideas. Not, oh, well, here's Blake's idea, let me go look at it. Well, Blake's a better trader than me, so I'm just going to go with it, right? Because what did you learn? Okay, you're not learning. You're becoming dependent, And even though we want you to be with us forever, we want you to also grow and become independent as well. Everyone with me and understand what I'm trying to get across to you? We want ForexAnalytix to be your rocket ship, not your wheelchair, not your cane. Okay, so you stand on your own, but you're part of the army, the ForexAnalytix army. Okay, yeah, and right, Kareem, like I was talking with Samantha yesterday, and she calls herself the captain. It's true. But I hope everyone that she works with is also a captain, because sometimes people will become completely reliant upon a mentor or a signal service or a trading room moderator, and you never know. I mean, I may retire one day, right? So you want to learn as much as you can, but not become dependent upon one person. You know, things change. The only thing that won't change are the trading tools and methods and discipline and psychology that you attain yourself through your own efforts and learning from others. Okay? So that's the end of my sermon. Try it for a week. And if you're not a member, it's a good time to do it, because, you know, I've seen some big Novembers. In fact, there's an old Wall Street adage that Thanksgiving, the bears feast on Thanksgiving and the bulls feast on Christmas. So let's get to the charts. I have a few things to talk about. Blake's been busy this morning, so I also made a speech to give him some time to catch up with his technical work. So here's the euro. We'll start here, okay? Now, I tweeted yesterday that the whole cosmos, which means several different universes coming together, all of existence, is waiting to attest to the breakdown. You could call it 1685, 95, you know, you could even bring it up here. But it's my view that the market isn't going to accommodate people to get up to those levels. In fact, it shouldn't. So this is not a trade I'm taking, but my expectations is this doesn't happen, and that we break to new lows first to get people to chase it. They'll say, oh, we missed it. And then from new lows, maybe we get that retest. But just to keep people off balance, and I'm looking at everyone, you know, maybe we test these highs again, but I don't even think we get up here. Where's the neckline that you have, Steve, on Euro USD? Where's it come in? 1685, if you're here and listening to me.
About 116, it's Blake, but about 116.70, 116.70 to 117, anywhere in that neighborhood, I think.
Okay, so that's a big neckline, you know.
Yeah, it's like an area. It's an area.
All right. Okay. All right. Well, anyway, that's my theory. You know, take it for what it is. But I do actually like the short side of Euro Swiss here. We're approaching the 61.8 here, and see, I wouldn't have even looked at it, but Steve pulled it up yesterday. He was talking about it. I think it was a daily. Yeah. So, I mean, this is a pretty classic 1, 2, 3 up here. And we had our first break off the highs. So, you know, I'm looking at fib retracements here on Euro Swiss. Your risk is pretty defined. Although I never put stops, don't put stops right over the high. Just in case it's a stop hunt, give it 40 pips tolerance over a swing high. That's something else I tweet about. People go, well, Dale, where are the stops? And I say, well, just imagine you're long or short, and where would you put your stop? That's where they all are. Okay, so they're all here, and we've all seen in our trading careers multiple stop hunts. So a stop hunt normally is maybe 10, 20 pips above the high, and then it gives it back right away, just seeking out liquidity. So to me, this looks attractive, that we should at least get this, and I can make a case for 114, and actually on the 4 hour. And Blake, if I'm taking too long. So right up here around 61.53, risking these highs, looking for, to me, this could just be ABC, and this could be another ABC, and now we're going to get another C. So that's Euro and Euro Swiss. Pound, I'll give you a freebie. We're pretty close to where Grega thinks we're going to complete, you know, and as great as this rally has looked, when you look at it a little bit longer term. Must be the weekly. We're just up, right up against the range again.
Yeah, Dale. The only thing is we have ADP employment coming in about 5 minutes. So.
All right, go ahead, take it over then, Blake. And I just wanted to mention one more thing. Although the S&Ps are blown off 11 higher, the bonds are not getting crushed, and U.S. dollar yen is at the 78%. Looks like a decent shot up there. So go ahead, bro.
Yeah, it's we're coming up to resistance. I was whoops, didn't want to do that. We are coming up to that 786 right here in the U.S. dollar Japanese yen, and the dollar yen. I mean, we may stab to 114.15. We have, you know, this ADP coming out, which the market's looking for about a 200,000 number print. So, you know, a big improvement over last month. And so this is going to be fairly key. But as if you're a ForexAnalytix subscriber, you know that we're up against really critical resistance for the dollar yen up at these you know, the 114 and 114.50 level. We've had a nice recovery, and I still have a short dollar yen. Obviously not happy about it because it's working higher, but you know, again, I'm looking more longer term versus, you know, shorter term. Couple other things really fast, and this number's coming out in just a few minutes. The euro pound, we hit the 200-day moving average, and
great tip, Blake. That was a great tip.
Well, I wasn't in the euro pound. I was short the euro pound personally. Right. Yeah, but I didn't put in a pattern in play. I should have, and I didn't yesterday, and it just kept going, and I'm like, okay, well, this thing's gonna keep going, so I didn't get a chance to put in a pattern in play. I trade obviously more. So
you would have 100 pips pattern in plays every day.
No, not necessarily. There's, you know, I have losing days just like everybody else, but this pattern, if I did it, I was going to do it up at around 88 pence, and I didn't. And but the thing is there's a lot of risk over the next 24 hours because the Bank of England meets in less than 24 hours. So it's going to be a situation where you got to be very careful. I mean, we're probing, you know, support down here, the 200-day moving average. I think we either, you know, obviously break lower starting tomorrow, or we bounce back towards this this resistance. It'll be, you know, pretty you know, key what happens. But what we should pay attention to is obviously the dollar yen. We're about 2 minutes away from ADP non-farm, so it's going to be a pretty important number. It's in some respects is almost a better number than it takes a lot away from the jobs report that comes out on Friday. You know, a lot of the oomph as ADP over the years have become more respected as far as looking at the private sector and what jobs have been created in the private sector versus, you know, government work as well. So even though the BLS, you know, the Bureau of Labor Statistics, non-farm payroll on Fridays are always the real the key driver to the dollar. This ADP still, you know, is pretty well respected. So we are at highs in the dollar yen, and you're right, we could push to 114.15, especially if we print over 200,000. So that number will be in about.
They're trying to front run it.
30 seconds or so. Yeah. They're pushing. They're definitely pushing. So what they do.
Maybe they'll get caught pushing in their pants. They'll have their pants pulled down on it. Everyone's looking for a good number, right, bro?
Hey, yeah, they are. And I'll tell you. Well, hold on, one second. Okay, looking for 200,000 jobs. This economy is humming too, so I'll be surprised if we miss. I'd be surprised. Yep, there we go. Good number. 114.15. Here we go. 235,000. Good job. Good job numbers. So as the market was looking for 200, we pushed up to 235. and the market was expecting a beat. We definitely got a beat. So we pushed to 114.15, the 78.6.
Are you going to add on up here, or you have enough?
I don't know. I don't know.
Looks like we're getting a little tail.
That's a pretty good number. I mean, yeah, it's just, this is a 5-minute chart, so I don't like to base my decisions really on a 5-minute chart. You know,
go to the 1 minute.
No,
I'm kidding you. Go to a tick chart.
I mean, we're you know, it's like we're already, you know, retracing a little bit. We were just here just before the data, so
right there it is.
Yeah, it's interesting, you know, how we're giving it. This is a good piece of data. I think if, you know, if you're an active trader, you know, you kind of wait for it to back off to 114, and then you might be able to scalp a few pips up there, you know, down here.
But you know, the GDP was pretty good Friday too, Blake, and it failed on a good number. Maybe that's what this rally was about. I mean, we rallied 90 pips this week.
Yeah, you know, it's I think what will be more interesting is the ISM, you know, data that we get a little bit later. We have the manufacturing ISM that's going to be pretty key, and then oh shoot, we get services PMI comes in on Friday after the fact. So, but you know, looking at the PMIs later today might give us a better idea what we're going to see in the for the BLS numbers. But
they're certainly not crushing the bonds, Blake. I've seen down 12 ticks on a good number.
Yeah, let's see what the bond market's doing. So the bond market, I mean, we're basically we're a pretty key support here.
Yeah.
This is you can see the support zone, and this is kind of how I had it drawn out from earlier. I mean, we're basically just, you know, sitting on it. It's a 38% retracement. It's going to be interesting to see what bonds
buy bonds, sell yen.
Well, if you end up buying bonds, you want to buy yen. Actually,
well, I know, but I'm talking about U.S. dollar yen.
Sell the dollar yen. Okay, yeah, but you know, you look at gold. Gold's coming under a little bit of pressure, so it's going to keep the upside pressure on the dollar yen right now. But this just
we have a metal guy coming in today, so you know it. Yeah, TF Metals. Craig Hemke got a pretty good rep.
I don't even know who that is, but that's cool. That's cool. Well, you know, as I was saying before, like the Aussie New Zealand. I should talk about the New Zealand in general. New Zealand had great jobs report last night. New Zealand posted a. Let's see, they created their unemployment change. Was expected at 0.8%. They came in at 2.2%. Unemployment rate dropped to 4.6% from a 4.7% expected. So really, really good numbers. And it's interesting, the Kiwi, you know, you can see the rally here, and we stabbed at new highs, and then we started coming down again. I'm long the Aussie New Zealand, and I picked up more Aussie New Zealand last night before trick or treating. Below 111, and it's in the Kiwis, you know, pulled back a little bit because I actually think the New Zealand dollar driver is not so much the economic data, but it's more the government. So, but you can see the Aussie New Zealand came in under a lot of pressure here. I'm a little concerned if it stays down here. I'll be more, you know, happy if we get back above 112 by the end of the week. We'll see what happens with this Aussie New Zealand. But this dollar yen might have a very similar situation. We're up right now, but we got to really see how it reacts towards the end of the day. But we're having a nice bounce. You know, all the yen pairs have been bouncing as the Nikkei strong, Nasdaq strong, S&P strong. I mean, we're just, you know, it's this constant grind higher in the markets. And you know, one of the guys in our chat room, Eric, he said that Gartman, I think it was Gartman is buying puts in the market. So you know what that means. That
means he's short of S&Ps. He always says of. I'm short of gold. I'm short gold.
No, that just means that we're going a lot higher because
Gartman, the contrarian market.
Yeah, we're probably going to do.
But he gets so much publicity, bro.
Well, I mean, you know, it's what happens when your niece is the one of the producers at CNBC. Anyway.
Oh, I didn't know.
Oh yeah. So anyway, we should probably end up blowing off a top up here somewhere. So.
Now, what you know, who you know, right, bro?
Exactly. Apparently that's the case. But I mean, look at the S&P. And the S&P continues to rally. The Nasdaq. I mean, we're stretching. I mean, just nonstop rallying in the markets. It you know, we don't see any real end in sight here. So, you know, as long as the stock market stays strong, it's going to keep you know, bonds under pressure. It's going to keep the dollar yen, or all the yen pairs, relatively elevated. Let me see where the Nikkei is at here, because the Nikkei is continuing to drive. And look at the Nikkei. I mean, this just is, I mean, blowing up higher. Ooh, actually, you know what I should do? Let me stop here for a second. Wow, the Nikkei is almost at the 127% extension, which is probably pretty key. Oh, shoot, I didn't want to do that. Probably pretty key here, especially as we're overbought and divergent. So that's something to pay attention to. You know, maybe the Nikkei has one last stab in a new highs, but you got to be careful chasing these yen pairs in this Nikkei up here, because it's not only is it divergent, we're hitting some, you know, some extensions over here too. But overall, very strong markets. The pound has had, we had a good PMI number out of the UK. It's going to get a little hairy here, and this is from yesterday. Let me delete this. So it's going to get a little tricky here with the cable, knowing that, you know, the Bank of England is tomorrow. So if you're long pounds right now, you have to be careful that we might get some sort of pullback ahead of the Bank of England. Like, you know, I personally think that the pound might pull back to, like, you know, it's 132.50, maybe back to 132 before making a decision. I think we're going to probably end up doing something like this, you know, ahead of tomorrow. So, you know, because everybody's expecting the Bank of England to raise rates, but, you know, so many people are starting to, you know, so many people believe it's a one and done, even though I'm not in that camp, that you might get some people leaning on the, you know, traders leaning on the cable today. So sorry, I didn't mean to yawn. It's been late nights recently, over the last couple of nights, especially with, you know, Halloween taking place. Did you have a lot of trick-or-treaters last night?
Not me, no. I have like 2 doors to get into my place, so
I
they
see.
can find me. But I will tell you a funny story. A good friend of mine, he has an apartment building in St. Louis as a broker dealer. He said, Dale, you know, I don't know what to do. I didn't pick up candy. All I have are saltines to give the kids. I go, well, you better leave. I go, your apartment complex is going to get TP'd if you offer the kids.
Yeah.
Saltines.
Keep the lights off. Keep the lights off. Yeah, exactly.
Saltine. Oh,
yeah, exactly. So let's do a quick overview of some of these majors really fast, and let's talk about let's talk about the euro. So, you know, this is one that, you know, I myself, I'm looking at the euro dollar, and I'm just really, you know, I've been hoping that we were going to get up here towards the 116.70, because you were asking where the neckline was. Well, the neckline's right here. You can see it, and I have you know, 116.70, but you got to give it a little bit of wiggle. So, you know, anywhere between 116.70 and 117, I think this is where we're going to struggle for the euro dollar. So.
I'm betting they don't get there before they take the low out from last week. And then everyone will chase it. Oh, it didn't test the neckline. They'll chase it, and then maybe we get a bounce. So
yeah, I don't know. This, you know, you know, here's the thing, Dale. You know, you look at this, and you know, you think just from you know, technical formation, this is a flag pattern. So, and we're already starting to break lower right now. I mean,
that's what I mean.
Yeah, I mean, this looks like it's going to be a continuation, a fairly common continuation.
When everyone's looking to do something at the same number, Blake, what I've discovered over the years, it either doesn't achieve it or it's meaningless and melts through it. I've seen it happen 100 times when everyone's looking for one place to do it.
Oh yeah. When the market's
You know what I mean?
when the market's leaning in one direction, and that has to be everybody. And everybody is trading this head and shoulder pattern. But I look at it and it's very prominent to me. So you got to respect it and just kind of keep in this theme, I think. And that's why the short euro trade, I think, is, no matter what you're trading the euro against, whether it's the euro pound or the euro yen or the euro Aussie or the euro New Zealand, whatever, those are going to have, it's the overall downside pressure on some of those crosses are going to be fairly prominent because of what's happening in the euro dollar itself.
Yeah, my point is people seeking perfection, being able to short it because they miss a breakdown, waiting for a breakdown, a test of it that never happened. So that's all I'm saying. You could have gotten short a few days ago, 20 pips underneath the breakdown. What's the difference? You're still short, right? So it's people looking for the perfect setup. And they're not always there, buddy.
No, if they were,
we'd be billionaires.
Right. I mean, that's just that's you're exactly right in that. The cable, as I talked about, you got to be a little careful with the pound here, especially ahead of the Bank of England. You got to be careful, like buying the pound right now. The Aussie dollar still looks really weak. Actually, we had this fib confluence here. The way I'm not trading the Aussie per se. The Aussie dollar, but man, I'd be a little careful with this one. This one's trading pretty heavy. The Kiwi had a nice bounce back, but you can see we're giving that back already. So you got to be careful with the New Zealand dollar here. And I think a lot of people have been looking for a New Zealand dollar bounce. They got it, and now you got to be careful that we don't give it back. Here's the dollar Swiss. The dollar Swiss is up against probably some pretty good resistance, considering this is a big 618 retracement. You can see the big 618 right here, and we're backing up against some of those levels. The dollar Canadian, this is a really key level of resistance for the dollar Canadian, and you can see this is a massive sell zone. So what I'm thinking here at this point in time is that if we cannot get above 130, I might be establishing a short position in the dollar Canadian. I might try to get ahead of that ahead of Friday, because Friday we do have Canadian and US jobs reports. So if we can get up here and a stab into towards 130, I might take a counter trend trade to position myself ahead of that. Whether if I'm up 30 or 40 pips ahead of the reports, I'll take the trade. If and if it's flat, then I won't do it. So I won't carry it through. So here's the US dollar Norwegian krona. That we're still struggling at the 618 retracement, but holding on most of our gains. US dollar Swedish krona, strong. We're almost at trend highs here. So the US dollar Swedish krona, the inverted head and shoulder pattern completes just above the 200-day moving average, but we have a downsloping trend line that comes into play here very shortly as well. That's something to pay attention to. The peso. Now, actually, the peso is interesting because the peso, you can see where we're at. We're struggling with this big 38% retracement. You can see the big 38% retracement up here around the 1930 level. Mexican central bank, Banxico, whatever. I believe their intervention efforts are right here. So the longer the US dollar Mexican peso does not push above the 1930 level, the more at risk it is to falling and starting back in this downtrend. So I'm keeping a really close eye on the US dollar Mexican peso, because if we come back and break back below this blue trend line, let's call it 19, but it's actually a little higher than that. It's like 1905 or 1906 or so. But if we break below that, this might be a position that I'm looking to take on the short side on this peso. So that's something that I'm very, very closely watching here as well. And let's see, we looked at the euro pound, which the euro pound is just on the 200-day. We're just probing below that right now. We looked at the Aussie New Zealand, and let's see what bonds are doing, because bonds are bouncing. Interesting.
And Euro Swiss, I just went into our trading room, letting them know that Euro Swiss was rejected at 61.8.
Oh, really? Oh, let's see here. The euros, wow, big. That's a big. Oh, you're talking about on an intraday chart. Okay. Yeah. Here we go. Intraday. Oh yeah, that was a pretty big rejection, Dale. Nice, nice call there.
Yeah. So nice. I think we're going to fail.
Right. Okay. Well, it sounds good. Let me see if Steve is around. I don't know if he's chimed in yet.
He hasn't.
He hasn't. He said he was.
Steve's quiet. I worry about him.
He's in a meeting, so he's going to be wrapping up with his meeting here in just a couple of minutes. Pound. Here's a pound yen. The pound yen continues to strengthen as the pound has been very strong. Here is the Aussie yen. See that we're also struggling here too. Let's see. This Aussie yen's trading really heavy, and it's right at the 38% retracement. Okay, so hold on. Let me delete this. Let me delete this just to get it out of the way. Now you can see that this Aussie yen, and especially if you guys are bearish the Aussie, this could be a really good setup for a short here. For those people that are just looking for a stair-stepping price action lower, and especially if the stock market rolls over here. If we do get a little bit of a pullback, I know I joked about Dennis Gartman buying puts, but also the one thing that I think we could pay pretty close attention to is this is also a channel top. You see the lower end of the channel here in the S&P. Yeah. And I don't know if this is like the quote unquote top of the stock market, but could this be the channel top that provides a little bit of, oops, let me delete that, provides a little bit of resistance for now? Could be, it could be. I don't know if it makes the market necessarily bearish, but could we find some resistance up here somewhere in this neighborhood? It's quite possible. So if we do, and we start to see these yen pairs roll over, maybe the Aussie yen, is not a bad choice for a possible short down here. That's a possibility. Let's see, New Zealand yen. Oh, the New Zealand yen. This is a really big rejection right underneath the underside of the trend line after the employment report. That was pretty key. That happened overnight. And let's take a real quick look at precious metals really quick. Okay, so here is gold. And because I want to leave all those crosses for Steve and so he can answer some questions on those too. Oh, hey Steve, how you doing?
I'm good, mate. I'm good.
Good.
By the way, have you had a look at the Nikkei?
Yes. And did you see we're almost at the 127% extension?
Yeah. The 127 is at 22,645 on my chart.
Yeah, I have it at 2268, but it's not snapped to prices, so we're almost we're almost there. And I
mean, this move is parabolic. It's now 17.5% move higher in 38 trading days. I mean,
that's totally normal.
Yeah, I mean, 17.5% is a decent performance for a year for an index, and we got that in 38 days.
That's a good statistic. I'll actually tweet that out for it's what Nikkei is up. How much? 17.
17.5%. Yeah, it's 17+% in 38 trading days. Yes.
Days.
I mean, you don't get to see that every now and then, right?
Right. Yeah, that's pretty That's pretty crazy. Yeah, pretty crazy. I'm actually going to tweet that out from our company account, which we all end up using. So pretty crazy stuff. So hey, I didn't look at, I was going to look at gold and silver, and I'll let you go to those because I got to get ready for my trading day. The one thing that I wanted to point out is ahead of the Bank of England decision, the euro pound is testing. I mean, we're below the 200-day moving average right now, but we're testing the 200-day moving average. I told traders, you got to be a little careful being long the cable here, because you know, a lot of people are expecting one and done with the Bank of England, even though I don't believe that's the course they're going to take. That doesn't mean that you can't get a little bit of a pullback in the pound now. So that's something that that I think.
Definitely, and we know that Carney has always been fond of being dovish. There's no question about that, right?
Yeah. Yes. Correct. So you got to be a little careful here. But I'm going to pass it over to you.
Okay, mate. Yeah, we do have things to see. Although, just briefly take me through, because I was in a meeting. What have you talked about?
Well, I talked through the majors and some of the yen pairs, but the yen pairs could probably use a revisiting, especially if you're going to talk in relationship to the Nikkei.
Okay, great.
Cool.
Perfect.
All right, guys and gals, have a great one. Steve, Dale, have a great one. I'm going to go get ready for my trading day. Thanks, guys.
Good hunting, bro.
Bye-bye, mate.
Bye-bye.
Okay, let me first begin by having a fast review of a couple of things that stand out in my opinion. One of them I already mentioned is the Nikkei. I mean, this move is purely nuts and parabolic, so there's not much to say. I mean, even the RSI is like bouncing between like 86 and 72. I mean, it's utterly nuts. At some point, obviously, it's going to snap back and pull back. But this move is extremely strong, and you know, on the other hand, we still notice the huge divergence with the USD yen. I mean, yes, the USD yen has been strong during the past 2 days. Yesterday specifically, I remember that I warned that, listen, be very careful, because you know we are testing the 113 level. As I wrote on Monday as well in the chat room, is a soft support, because you know if you look at the daily closes, 113 has managed to act as a resistance or support multiple times, and we also had this triangle. So this thing has worked for now, and you know, as long as we remain above it,
Good call yesterday on that.
Thank you. I'm still looking for perhaps a test of the 115.80 to 116 area, but anyhow, I cannot be bearish.
It's
for
surprising
sure.
the yen and the gold are both up.
Yeah, that's not very usual. The truth,
No.
the truth is, silver, by the way, because Blake would check it out, has held for the 4th consecutive day, has held this support area, and gold, if we have a look at it. But for me, other tickets are more important. Gold is still chopping around in an area that's defined like it's between the 1300 level and 1260, let's call it roughly. So personally, I'm even bored of looking at it on a daily basis. I mean, as long as it has this kind of a behavior that it has, I mean, I'm not really looking to trade it. I mean, not yet. Until it becomes clean again and it starts trending, etc. In my opinion, it's a liability. I mean, you have a lot more chances losing money trying to trade an instrument that behaves like that than making money. And even if you make money, you know, you'd better book it and go do something else because you got lucky. That's my personal opinion. But on the other hand, crude is very interesting. If you remember, Dale, 2 days ago, I explicitly mentioned that I have a very nice confluence of targets up here, which is the high that we got there before the move lower started. It's the 161.8 of this extension. It's also a 161.8 of this move, so extending this move from here, which I haven't drawn now, but trust me, it is. And it's also this ascending channel resistance. So everything confluences at this level, at 55. Okay, so we expected the move higher to unfold. It did. So the question is, what happens from here? The answer is that, of course, on a strong bull market, an acceleration above the channel is not out of the question. Okay, but this is not the place to establish fresh long positions. And if you have been long, this is the place that you take, half of the profits, in my personal viewpoint. Now, if we get to see a pullback down to 53, that's absolutely fine and perfect. That will be a very nice opportunity to join the trend. Otherwise, you just let it go. I mean, if it wants to penetrate above and accelerate even further, that's what you should let it do, because there is no risk reward, no reward to risk to buy here, because where would you put your stop loss? Down there? And if you want to put it down there, where would you be targeting? Probably at an area that it's unlikely to come before your trade is at risk or scares you out. So crude has now finally reached this area, and for me it's very interesting. I'm going to be very, very closely monitoring it. If I see some kind of a rejection from here, might even take a short-term stab at it. But I'm still a believer that crude remains bullish. So any pullback, I'm not going to be treating like a major reversal, just a corrective move from that confluence of resistances. Okay, so to make myself very clear. Copper, because I know that we have friends that are monitoring and are asking from time to time. Copper is still following, this kind of plan. I mean, we had a bad day there, which was a little bit scary, but regardless, it seems to be picking up now. So the bull flag scenario still remains intact. Obviously, we need a break above there to confirm, but this also behaves quite well besides that little scary day that we had. Cable, yeah, another one I want to mention. Cable seems to be breaking above this triangle resistance, obviously ahead of the BOE. I think it's a bad idea committing because we had a technical event, because this might end up being another type of formation, for example an ABC. So cable can also prove, this price action can also prove corrective if we get rejected from anywhere below the 61.8. So the triangle was one possible interpretation. This is another interpretation, like a channeled interpretation. Okay, so I wouldn't jump the gun of being long the cable, especially ahead of the BOE. That's exactly what Blake said. I couldn't agree more. And don't forget, the long-term view of the cable, Blake has shown this multiple times, is this. If you see the two blue trend lines, you can interpret this as a symmetrical triangle. Okay, so for us to have a longer-term break, we need to cover some distance either one side or the other. Now, having to do with Euro Pound, I know that he briefly showed it. I remain bearish the Euro Pound, mainly because this was a perfect rejection from the 50% fib there, and I think that the move lower since does not permit much of a different interpretation. Just look at it. We've had 2, 4, 6, 7. Today we are at the 8th down day during the past 9 days. I mean, that tells me a lot about an instrument. And we're currently testing, we see how we close today, this low and the 200 EMA. I really believe that the next target is going to be somewhere between the 61.8 and this support area. So when anywhere between 86.50 and 86.80 might produce, let me delete all that, might produce some kind of a short-term reaction, okay, for something like that. Okay, let's have a look at questions and get more ideas about what people want to see. Your Asian crazies are buying Nikkei near blue skies and they love tech. Yeah, no, no disagreement there. Oil and metals, we did that. Powell has been so much anticipated that dollars shouldn't overreact an announcement. Trouble is if Trump uses the announcement to talk down rates and dollar. Check out the DAX. Yep, DAX is a good idea to have a look at. DAX is trying to go parabolic as well, by the way. It's almost 2% higher today, and it's currently testing this ascending channel. Okay, the next resistance for DAX is at 13,617, which is the 161.8 of this move lower. I have not much of a doubt that DAX should pull back rather soon, but I have absolutely no reason to believe that any pullback is going to be an actual reversal and not just a pullback. Okay, so you might see DAX pulling back from anywhere up to there, but you know, I think that as long as we remain above this area, there's absolutely no reason to be bearish the DAX. Okay. Okay. Obviously, buying up here makes no sense, right? 2,610 on SPX. My target is not far away from what you're seeing. My target is 2,609, almost actually, which is the 261.8 of this corrective move lower. By the way, in the SPX, we're still holding this steep ascending channel. We are holding it in a perfect manner. So another push higher towards there is definitely a possibility. Now, I've had a lot of people talking to me and even tweeting to me about the Russell and how bearish it is. I fail to see that because I still see a megaphone formation as a consolidation. It depends on how you draw it. But, I mean, this price action is undoubtedly not bearish. Okay, we've spent so many days chopping around, but we have actually managed in, let's have a look at it, so you understand how easy it is sometimes to be to know clearly if a move is impulsive or corrective. Okay, within 33 trading days the Russell went 12.5% higher. Okay, what have we done since it has taken 18 days, half of that, 18 trading days to be 1% lower? So honestly, what makes you think that a move that took you to a 12.5% higher in like 30 something days and has managed to fall in half of that duration, only 1%, what makes you think that this is a reversal that's going to make Russell crash? In the markets, anything is possible. We might get like prosecutor coming out today and saying that, yeah, I don't know, that Trump is being prosecuted, for example, and markets might go wild and panic and everything might plunge. But, you know, we're not talking about what is possible because anything is possible. The question is, statistically, what is the most likely scenario for this kind of price action?
Yeah, substitute probable for possible. Right, buddy?
Yeah, exactly. So, you know, what is the most probable thing to happen? A break higher. Okay. Unless we get something like dramatic, I mean, this is purely consolidation after a strong move higher. Zach says that Carney is speaking. Actually, he has already started speaking because I see the timestamp. Every economic number in the world is good, so why are interest rates crap? Jenga games always end in collapse. I agree with you, and most likely, don't forget that the bond market is multiple times the size of the stock markets globally. I mean, I think it's 6 times bigger, 5, 6, 7 times, something like that.
I've heard 10. And then the only other market bigger than that is the currency market.
Yes. But don't forget that the currency market is binary. So one way or another, you can't have bubbles in a currency market. I mean, you can have some currencies that behave out of normality for a period of time, but you know, general bubble. Yeah, you can have. Yeah.
You know, I know a guy, Steve, who says that even when it looks impulsive, and because of central banks and currencies, that everything is corrective in currencies, and he's a waiver. But anyway, I found it interesting. So you could have impulsive moves within it, but his basic thesis is kind of like yours. Everything is corrected because of the battle between central banks.
Yeah, let's see.
Yeah.
I think it's going to prove out fast. By the way, this is from Vamsi. He says the Aussie USD has 6 types of confluence at 176.36 area. You mean probably 0.76. Okay. So you mean that it's currently on support and it might rebound from there. Okay, sure it might, but I wouldn't be so optimistic, mate. And the reasons are the following. Let's have a look at it. The reasons are the following. First of all, this price action does not look like something trying to reverse. Second of all, the Kiwi has already moved a lot lower, and I think the Aussie might do some catching up. Other than that, I can tell you that if we go back to the move lower, I can tell you that it has broken an area that is also extremely important to the downside, which is the 77.40. So at least as long as we remain below this area, you know, no matter how many confluences I will have at, below us, I would still remain bearish personally. Okay. But okay, I understand it's currently at support. One of them is definitely, I can tell you as a fact, is the 61.8, which, you know, initially, helped us achieve this little rejection here. But honestly, I don't see many factors that would turn me bullish from here. Being more cautious, for example, I totally understand, but bullish, no. I want to see a lot more to be even remotely convinced. WTI, I've already looked at it. Pound Kiwi, sure. Let's have a look at the pound Aussie and the pound Kiwi. Okay, the pound Aussie has reached the 78.6. It obviously remains bullish above 170.70 roughly, and the next target is 176.60. Now, will it go directly there? Likely not, but you know, basic technical analysis will tell us that as long as it remains above this area, you know, any pullbacks should be bought. As simple as that, because you know, we have no proof or no evidence that this might be about to reverse. Quite the opposite. Okay, so no reason not to be biased in a bullish way. Now, having to do with pound Kiwi, with yesterday's strong employment data, obviously the Kiwi had a strong reaction lower, but we've already, first of all, we've already pared back half the losses that we had. Second of all, that reaction came exactly from the 127.2, but on the other hand, we have explained multiple times how important, how critical this break above 190 had been. And, you know, I would need a lot of effort to be convinced to be anything but biased long. So any pullback should be bought, and, you know, the next target is up there, almost at 2. Okay, the 161.8 of this move. So that's it with pound Kiwi. Gartman just went bullish oil at 55. Oh my God, this guy, honestly. Right at confluence of resistances. I'm not saying it might not work, but I'm saying that, you know, this is probably in the short term the most stupid level to want to be long oil. But, you know, for Gartman, that's not a surprise, I'm guessing. He is probably the strongest contrarian indicator ever invented by human nature. Okay, nothing has changed with USD CAD since we talked about it a couple of days ago. I as long as we remain above 128, you know, it remains bullish. There's no question about that. But 130 is very, very strong resistance. It's both a horizontal area of resistance and the 200 EMA. So obviously, first of all, I wouldn't be buying here, even, you know, even if my life depended on that. Second of all, I'm going to be very interested to see what's going to happen if we make it to 130, because any type of rejection up there, I'm going to be selling it. Might this Nikkei be a candidate for a blow off top? This price action definitely is. But, you know, I don't like to call tops until I actually see them manifest. For the time being, it's a crazy move higher, which, you know, I'm just monitoring and, you know, waving my head. That's the only thing I can do. What's interesting is crude. What is interesting is crude in euros. Okay, we can have a look at that. Crude in euros. Okay, let's. You already have a chart actually. Okay, that's from Ronit. Let's see. So you think that this is likely a triangle here? Let me see. This is a monthly chart. Okay, we also had a breakout in the short term from this trend line that I see passes from multiple months. On the other hand, we're testing these lows. Yeah, there is more upside for sure for crude. I mean, in general, I see crude remaining like bullish.
I wish I had taken mushrooms before I saw Ronit's chart. Craig, I see you here in the house, so we'll be with you in about 3 minutes.
It speaks volumes of what coming higher rates may be tough to say. Yeah, absolutely. And you know something, higher rates, I'm not sure that our economies can handle them. I mean, high rates, I mean, decently high rates are going to have multiple repercussions. Don't forget that the debt is not the same that it was 10 years ago when the financial crisis was about to begin. And with one thing is for sure, the normal rate level is not what it used to be. Now, how much higher rates can the economies stand at the moment? I would guess not a lot higher. And I'm pretty uncertain of what's going to happen if we see bonds. By the way, since we're talking about rates, let me show this fast. I showed it in the chat room yesterday as well. The treasuries got rejected from the channel support this time, you know, tested as resistance. So it's very, very interesting to see if this is just a short-term pullback and they actually want to move higher, in which case we can even talk about a, you know, a false break lower. But as long as this line is holding, there is a good chance that they're going to accelerate bonds. I mean, are going to accelerate lower once again, which means that rates are going to move higher once again. Check out DAX daily RSI. We saw DAX. Let's have a look specifically at the RSI that you want. Yeah, it's currently at 84. Not a real surprise. Nikkei was the other day at 87. The Dow Jones was at 89. So unfortunately, this type of readings in the daily RSIs lately in the stock indices are, you know, are not unseen. Kiwi, pound Kiwi, we saw palladium, platinum. Guys, we're gonna have that. We're gonna have a look at those tomorrow. Palladium, platinum, etc. Because the interview has to start. To me, who is learning phase, just very grateful to have found a team of analysts. Yeah, thank you very much for your kind words. Currency scheme, you can, but last time it happened was 31 and 33. Another request for Kiwi. Okay, so let's have a look at the Kiwi, and the rest we can look at tomorrow. So let's have a look at the Kiwi so Dale can start with his interview. Okay, Kiwi yesterday obviously had I mean, at night it had a very strong reaction. That reaction came from the previous low down there. Okay, look at it. So this was a very interesting level. I mean, it's the second time that Kiwi reverses from there, but honestly speaking, I cannot turn bullish Kiwi. I think that any rebound to 69.70, 69.80 is a good opportunity to be selling it once again. We were expecting, if you remember, a couple of days ago, we drew this, that either Kiwi is going to move a little bit lower, come back, retest the 68.70 area, and then move lower, or if it's to correct from somewhere there, it can make it up to 69.70 and then push lower once again. So I think this is the scenario we're looking for at the moment. Okay. By the way, the RSI has confirmed, how bearish the trend is, because the RSI hit like 22, 23 levels. So in my opinion, it's a very dangerous game to start trying to buy the Kiwi. You'd rather wait for a rebound to sell than the opposite. Okay, thank you. We can have a look at the rest tomorrow. Okay, Dale, enjoy the interview, mate.
Thank you, Nostra Volgi. Everyone knows it's Steve Volgi, and my nickname for him is Nostra Volgi. So Craig, welcome to Face, buddy. Thank you for taking the time. I'm making you the presenter. Looking forward to hearing your voice, and perhaps you have some screen shares for us, show your website and some instruments that you're looking at. Very interesting day to have you here as well, Craig. Just waiting to hear you. First you do the mic, then you do the screen share. Issues?
His mic seems to be unmuted, so I don't know if he has selected the correct mic, but having to do with us, he seems to be okay.
Okay, I just unmuted his mic.
Yeah, it looks like I'm there.
All right, Craig. How are you, buddy?
Well, I'm fine, Dale. It's a pleasure to meet you, electronically at least.
It's great to meet you. David Modell said that you were going to be a great interview, and I know he interviews almost as many people as I do. So, I really want to thank you for taking time out of your day to share your views. And, there's a lot of interest in metals. There always is. And I've been to your website. I think it's got great content. I checked it out yesterday, and your podcast. And you're not one of those metal people that's a perma bull or perma bear. You seem to go with the flow. I want to open it up with, how did you get into the precious metal arena? Were you a coin collector as a kid? How did you end up doing what you're doing now, buddy?
Actually, it's quite by accident. And that's probably the most interesting part, personally, at least, Dale. When my trading experience goes all the way back to when I was in college. I had a brother-in-law who was a commodities broker, and I was going to school in Nebraska. And so, there's always a lot of attention to the grains.
Agriculture. Yeah.
And in the late 80s, there were a couple of big spikes in soybeans. And for a poor college student to be able to buy a couple of options, and make a couple $1,000, it's like, wow, this is something else.
Yeah.
And so I followed him, and I have a brother that was a stockbroker. And so after college, I became a stockbroker myself. I was Series 7 licensed for, well, I guess until I finally let it lapse in about 2009 or 10, so about 20 years. Somewhere around 2008 or 9, I got off the corporate ladder and decided to start my own business. And in starting my own business and watching it fail, which is always, a learning lesson anyway.
Yes.
And in watching it fail, I had a lot of extra time on my hands. And I found myself looking at the markets that I'd always, followed with kind of a little different eye, rather than having, and this kind of gets to where I don't trade at all anymore, because I always found, and I was particularly susceptible to this, I would have a bias, right? I mean, I think that happens. That's human nature to some extent. You get biased in your views, especially if money's on the line, because you want to work so badly.
Right.
And so I felt that I had a kind of a general market bias. You know, I was always told this was the way the markets worked and believed in all that kind of stuff. And I started learning more about what was really moving the markets. And this was post or right around the time of the financial crisis. And so it was a real eye-opening awakening. And about the same time, I discovered Zero Hedge.
Okay.
And that was 2009. I mean, it was still a blogspot site back then.
Mm-hmm.
And I signed on, registered, started interacting with some of the people there, you know, and it was at the time that site was just about traders. I mean, it was mainly prop desk guys in New York. That's the whole Fight Club meme. And I mean, this like opened my eyes to a whole new world, you know, of what's really moving the markets. And it was there that I assumed this role of Turd Ferguson, and from there it morphed into what we have today.
You have to show the community your Twitter icon. That's not a 10-gallon hat; it's a 100-gallon hat. So
well, there's always questions about that. When I signed up for Zero Hedge, you know, you got to pick an anonymous name, and
right.
And I had just seen this old Saturday Night Live skit that had a Celebrity Jeopardy, and in there the character who's playing Burt Reynolds changes his name to Turd Ferguson, and that was just on my mind. And I thought, well, that's kind of a funny name.
Well, I mean, it's fertilizer anyway, being from Nebraska. Right. So,
right, exactly.
Did you want to share your screen, Craig, or is there anything you want to show, or this just be a verbal thing?
I think it's just verbal. I don't really have anything. I certainly don't have.
You know, I could always show your website. In fact, you know, I'll probably do that. So, why don't we get to the markets here? And you know what? You brought up your transparency about saying that you don't trade anymore. And, you know, I say there's no law that you have to trade. It's a choice that people make, and they think it's going to be easy money. Like, you know, you hit on maybe the beans made it to the teens. That was an old war cry from the CBOT. Yep. But the fact that you recognize that you didn't have the right psychology or mindset, or it just wasn't worth it to you, and yet you could help people by providing insights into the market, I want to congratulate you on that, because a lot of people, their egos will not let them admit not everyone can be a trader. And then you go back to that, oh, well, you know, if the guy is not a successful trader, how can anything he says have value if he is not pulling money out of the market? Do you ever get that question, your subscribers and people that come to your website, and you tell them, I don't trade anymore, and they say, well, you know, what good is your advice or your views or your opinions? How do you answer that?
Yeah, it still comes up every now and then. And to fully answer your question, I stopped trading. I made a lot of money, as a lot of folks did, trading in 2010 and 11, you know, when the metals were going up. That's how I amassed a war chest to build the site and all that kind of stuff. But no, what I discovered was that if I'm going to be fully objective in my analysis, because you mentioned, I mean, I'm long-term super bullish, right? I'm always going to be advising people to accumulate physical metal for what I still expect the days to come of the next financial crisis and where we go from there. But no, in the short term, it'd be foolish just to be constantly saying, you know, this, you got to buy now, got to buy now, got to buy, because it doesn't work that way. And I've got to be objective about that. You know, and if I'm long something or long some options, and all of a sudden you're talking about it.
Uh-oh.
So I always felt that kind of skewed my objectivity. The other part of it too, Dale, is I am so utterly convinced that, well, all markets are now attempted to be controlled by the banks, the central banks, and the HFTs, the high frequency trading, but the metals in particular, and that's how I got a site in the first place. The metals in particular are really bad in that regard. And so for me, then
I think that's why Blanchard was behind opening the cash and carry gold exchange in Singapore to emancipate gold from the paper market.
Yeah. Well, and see, it would be in that regard, it would be somewhat hypocritical of me to sit there and talk about how, you know, the paper markets for the metals are a rigged game, and that the banks are setting the whole thing up to use against the specs. But at the same time, I'm advising people to go in and trade in a, you know what I'm saying, Dale? And so
Yeah.
I felt, you know, so every once in a while, you know, maybe once or twice a year, I'll see something like, you know what, we are so deeply oversold here. You know, this is getting out of hand, and I might buy one single call just for fun. But no, yeah, I don't trade actively at all anymore. So when people say, you know, because you get that a lot, right? I'm sure you probably do. I think anybody that has any kind of newsletter subscription, you know, it's always, well, if this guy was so smart, he wouldn't have to, you know, wouldn't have to have a newsletter. My site's not really about trading. It was maybe 5 or 6 years ago, but now we're really in this business of what we call preparing for the end of the great Keynesian experiment. And the site is not so much populated with traders as it is like-minded folks that recognize the world for what we think it is. And we all kind of help each other, providing links and data and articles and stuff. So it's really more of a community on that's recognizing the fellas in the market.
Greg. Love communities, because you know what? Investing's a lonely business. And even if you're, you know, a great trader, and I don't claim to walk on water, but a big part of my day is intelligence gathering. So, and if I was in the ether, like a lot of people want to be, I'd miss a lot of things. You know why? We only have 2 eyeballs.
Right. Right.
So congrats on having a community. So you're talking about the end of the Keynesian experiment. You know, I've been reading about this for 30 years, okay?
Yep.
For quite some time. What is it that tells you that we might be near the precipice of this experiment, and you know, the banking system as it is changing? Is it a power shift from the US to possibly Asia? Could it be certain war drums? Could it be just the fact that we've really tried this experiment in central planning that the Fed isn't going to be able to stop once it unwinds? What's behind your belief, and what type of time frame are you and your community talking about? I know it's always better to be early than late to prepare for something. You know, you don't go out and buy food when everyone's raiding the grocery stores. You have it in your pantry. So I'm guessing you're a big believer in holding physical metals, but tell us what you think are the linchpins that may be the beginning of things starting to turn from euphoria to, I don't know if things are so good, to some type of panic.
Well, it's all of those things you mentioned on a daily basis. You see that accumulating, but to the end of the great Keynesian experiment, you know, Keynes had this system, this belief, this economic belief, and it's a debt-based system, right? I mean, money is debt. The whole system is based on always growing debt. That's why the Fed is in there wanting to spark 2% inflation, so that you always have to keep growing the money supply and thus keep growing the debt. And there's a mathematical problem to that, and that's probably the main function of the end of the Keynesian experiment, and that you're already seeing in the statistical part of it, you know, what is it, $1 of jet, or it takes what, $4 of new debt to make $1 of GDP or something like that now?
Yeah, it's losing its potency everywhere, including China. Yeah.
So you got that, and then you got the other side of it, the compounding interest component of it. You know, as the debt was growing from, you know, 2 trillion to 4 trillion, you know, to 8 trillion, those were at least were somewhat manageable numbers from a money supply standpoint, and with the U.S. having reserve currency status. But now, you know, if we double every 9 years at 8% growth or whatever, right? The debt is eventually, that math is what destroys the system, because the accumulated debt begins to grow so quickly that you can't grow your way out of it, you can't print your way out of it, and eventually the experiment ends and that debt-based system collapses just because you can't service all of that accumulated debt. You can't have the economic growth, you can't print money fast enough, whatever, to service that accumulated debt that is now growing exponentially.
Okay,
And
so now we have still historically low interest rates.
Yeah.
Makes it manageable, right?
Right, exactly.
So
that's all.
if there was ever a spike in rates, and this could be a huge distribution top in the bond market here, maybe there's one more run, that because what you're saying is because of how national debt has grown exponentially, the system will not be able to handle the same type of interest rate increase it has in the past. Is that correct?
Exactly. The Federal Reserve, the Treasury Department balance sheet, they've shifted over the last 10 years. They've been doing this now for decades, but they've shifted over the last 10 years. What's the average maturity of federal debt, U.S. federal debt at this point is under 4 years. I think it's 3.7 years, something like that, with an average coupon now that's down at below 3%. Right. And they've moved everything into the short term. And what they can't have is some type of normalization of rates, because by doing that, they have, I guess, minimized that line item on the federal budget that of interest on the national debt, which even as the debt has grown, that line item has been stable because they just keep shoving into shorter and shorter maturities with lower and lower rates on it. But so this notion that somehow rates are going to normalize, that rates can go to back to 6% on the 10-year, 8% on the long bond, something like that, like we saw 20 years ago. It just can't happen, because that line item on the national debt would go from 370 billion to 740 billion to $1 trillion in a matter of years.
Do you think that the Fed, if the bond vigilantes ever reappear in earnest, that the Fed can stop it, especially if it's a confidence crisis? Rates go up for two reasons: economic growth or a problem with the currency. Yeah. What do you think? My thought is, looking at the dollar, even if that has another run, that what might bring a rise in rates could be a weak dollar and a loss of confidence. Do you think that there's a threat to the U.S. dollar being the reserve currency, and where's it coming from?
With there's a number of questions in just that one question, Dale. I got to pick one out of there.
All right.
How about yes? I'll just say yes. No, okay. It is no doubt. The Federal Reserve will try, just as the ECB and the Bank of Japan continue to do their deal. Just because the Fed doesn't appear to be overtly running QE at this point, doesn't mean that the other central banks aren't trying to pick up the pieces. That's all part actually of what I thought part of this balance sheet drawdown was, that the Fed is getting set to do, or has already begun, I guess. Or they're
the BOJ has even stepped further into buying equities.
Exactly, and the Swiss National Bank is doing the same. But I've thought for a while that's this $10 billion a month that Mother Yellen says she's going to start liquidating out of the Treasury portfolio of the Fed. I think that's just going to be sopped right up by the ECB. I mean, the ECB, Draghi has complained about not having anything left to buy. They already own such a significant percentage of the German bond market. God, Dale, even the Spain doesn't even have really a functioning government, right? But yet their 10-year note is at about the same level as ours.
Yeah, 1.5.
Right.
You think that would be the short of the century?
Exactly, and it's because there's this constant bid from the ECB, and they're running out of stuff to buy, and so the Fed is like, well, we'll give you $10 billion a month of our bonds to buy if that's what it takes.
So they'll work out a deal.
The central banks will step in and do whatever needs to be done. They proved that in 2009, and they prove it on almost a daily basis now, every day since. So that's the first part. Yeah, whether they can, that's a whole other story. Now, the second part of that, you said, can the dollar enjoy reserve currency status forever? And of course, the answer is no. That's a transient privilege. It has been for centuries. We took over from the pound back in the 1940s. The hard thing though, Dale, and this is where the kind of, I guess we'll call it the cognitive dissonance comes in for most people probably listening to us. But if you're listening to us and you're on your side, Dale, they probably should be championed and congratulated for actually already thinking outside the box. But what most folks can't understand and can't even contemplate is a world they've never seen, right? I mean, how many people are left alive in the world that were paying attention and knew what was going on in the 20s and 30s, you know, back when the US dollar wasn't the world's reserve currency? And so everybody that's on CNN or everybody that's on CNBC or writing for Barron's or the Wall Street Journal, the only world they've ever known, the only world that they can even begin to recognize is the one where the dollar's the world's reserve currency. Well, that's it. Like I said, that's a transient privilege. It's not going to be ours forever. History
and the last transition was not exactly smooth.
Yeah.
We had a couple. We had a World War.
Right.
We had a Depression.
Right.
And that was Anglo to Anglo. You know, we're basically brothers with the UK, right?
Exactly.
So,
exactly.
So this one, I think you have to look towards Asia. That's where all the growth is. Is the IMF going to come up with a solution and have some type of SDR to replace it? Is that where your head's at?
You know, there's a lot of smart folks that are way smarter than I am that think that that's the direction it's going. And maybe it is. Maybe it'll be a basket of currencies. It's really impossible to say. But what is possible to say is something is coming. As I look back and connect the dots and, you know, and try to read the tea leaves, whatever metaphor you want to use, back to 2008, I think the collapse that happened in 2008, because remember, it even caught the Bernanke and the Fed by surprise. I know everything was great.
Contained. Yeah, Bernanke said that the prime mortgage problem was contained.
So I would think that the same kind of classically trained central bankers at all the creditor nations, from Russia to China to India to Brazil, you know, the BRICS, whatever, I'm sure they believed them too, right? They thought, yeah, okay, everything contained. And then when that happened, in my personal opinion, I think the Chinese looked around and went, whoa, wait a second, time out. We had no idea that, you know, some scrupulous bankers on Wall Street could bring down the whole global economy and potentially wreck our deal over here. And so I think they have accelerated putting into place the foundation for a system that will rival the dollar. And you see it with the cross-currency swaps with the yuan that are now, there's 120 of them or whatever the hell it is. You see the infrastructure being built in Shanghai, whether it's the futures exchanges, you know, or whatever. You see Russia continuing to, 34 metric tons of gold they bought last month. I think all of these moves are being made in the background, not to be like shoved forefront in your face on a Tuesday morning and say, okay, we want to start a war. We're going to, you know, do this to you. But at the time of the next crisis, because again, the first crisis was never really solved. It was just simply papered over with trillions of dollars of central bank assets. At the time of the next crisis, an alternative will be presented. The Chinese and the other creditor nations will have this foundation laid and ready to go. And that will be the time it'll move.
Okay, you know, what could be a flashpoint is something I've thought about, is the new sanction rule about doing business with North Korea, that anyone who continues to do business with North Korea will be left out of the dollar system.
Yeah, yeah. We've tried that before,
and you know, China already has a backup to SWIFT, don't they?
Yes, and that's being built as well. And we've tried that. Remember, we used that on Iran as well. Remember, Iran was swapping, at least it seemed like they were. They probably were. So I shouldn't say with 100% certainty, because who am I, you know, I'm just trying to read this stuff myself. But it appeared as though Iran was going around the SWIFT sanctions by exchanging crude oil for gold in Turkey, right? So that's a tool that the U.S. has used, a hammer that they've used on non-compliant countries now for decades.
Yeah, Iraq.
Yeah, I would think after a while you'd get
everything for hegemony.
Right, and I think after a while you get a little pissed off, right? Yeah. I mean, and especially if you're the Chinese and you look, we've treated the Chinese and the Russians as if we hold all the cards for decades. Right. I mean, go back and look at how, you know, the Ukraine situation came about 3 years ago, and everything that's happened since. The U.S. acts as if, you know, we are infallible and we hold all the cards. And frankly, we don't. We act like we do, again, because the politicians in charge, that's the only system they've ever known.
I got a good question from Bill Henderson here in the house, and he said, why would the Chinese do this, knowing that the yuan, being the world reserve currency, means they will be debtor to the whole world like us?
There's, well, one, I don't know if they try to be the world's reserve currency. They may just offer it as a regional, some type of, you know, not
interesting,
not to just simply supplant the dollar, but something that can increase the use of the yuan there regionally in the, because that's where all the most of the trade is in it anyway.
And growth.
And growth. What remind me just the second part of the question, Dale, because I lost my train of thought there for a second. It was, why would they do it? And then what was the second part of that question?
Because it would mean they will be a debtor to the whole world.
Oh, yeah. Okay, yeah. No, look at it. What has the U.S. been allowed to, what has the U.S. done, especially since 1971, in becoming the debtor of the whole world? It's guns and butter, man. It is, there's no limit to what you can do. The Chinese and the Chinese Politburo and the leaders recognize that they got their biggest risk to their political power is their 1.2 billion people.
Right.
Because if they don't, you know, keep a chicken in every pot and keep growing, then their 1.2 billion people are apt to rise up. They're already moving to the cities, and they could overthrow everything and kick those guys out of power. Their biggest risk is not mollifying the masses. Well, okay, well, how do the U.S. have guns and butter, massive social programs and all these wars and everything else since 1971? Through the unfettered printing of dollars to turn us into this debtor nation. Well, the Chinese government may look at it the same way and say, you know what? We want that power, because if we can just unlimited print yuan, because of the demand now globally for the currency, and have a yuan recycling scheme and a petro yuan, all the stuff that the U.S. has had for decades. Well, hell's bells, that means we'll be able to print yuan like crazy and feed our people and mollify them and keep them happy. So that's why they'd want to do it.
Okay, what a pearl. You know, I'd like to wrap it with just a couple of market questions here. Do you have some important levels that you're paying attention to in the gold right now? And I noticed that you keep an eye on U.S. dollar yen, that it has a correlation to gold. And today's kind of unusual, Craig. It is unusual, yeah. U.S. dollar yen up and gold up at the same time. I haven't seen that in a while.
Yeah, so, I don't know what happened.
What are your thoughts on the gold in here?
Yeah, something happened overnight, because all the commodities are green today. I'm not sure what it was. It definitely, the gold surge overnight came in two waves. The second one definitely looked like a HFT stop run, because there was a big sudden burst of like 4,000 contracts that pushed price up to 1281. Okay. And that's the biggest problem, I think, in all markets are these HFTs, right? That scan the headlines, or they take inputs. The key input for the HFTs that trade gold is clearly the dollar yen. We first discovered that about 3 years ago, this time in the fall of 2014. You can see them on a daily basis move tick for tick, where the dollar yen moves, and then the HFTs that trade gold, buying and selling it, respond immediately. People can watch this today. The Fed, the COMEX will be closed at 2 o'clock Eastern. We'll be on the Globex by then when the Fed headlines come out from the FOMC. Watch, have a dollar yen window open, have a gold window open at the same time, and you'll watch them move in tandem at almost a nanosecond level. So yeah, we watch that on a daily basis.
Correlations are great till they don't correlate.
Yeah, no, but they still correlate today notwithstanding. So we watch, so a lot of forecasting for gold is forecasting the dollar yen, unfortunately, at this point.
Right.
But one thing I'd want everybody to watch, the last two times in in April and in June, when price was maneuvered down through the 200-day moving average, it brought out a massive speculator flush in the COMEX, where
that flash crash.
Well, no, that kind of started it in June, but then what happened about a week later, price really smashed through the 200-day, and in April there was about a 40,000 contract shift in the commitment of Treasury report because of it. In July, it happened over 2 weeks. There was a 70,000 contract shift. I think the banks are hoping to smash price below the 200-day later this week. The employment report is coming Friday. We might have the new Fed chair tomorrow. Watch that 200-day. If we do smash down through there, it might set off all kinds of large spec selling, this kind of HFT selling, technical fund selling. At that point, your floor is very likely really solid support down there, 1240.
Do you have any views on crypto and Bitcoin?
I think, most gold bugs, and I'll wear that badge, for whatever reason. I guess they just don't understand it because we're a bunch of cranky old men, right?
I don't understand it. Yeah, I'm old and cranky. Go ahead.
I think it's great. I think it's a complementary asset to gold, and I think actually the real value of it, bigger picture for gold is that it's awakening a whole generation of millennials and younger folks to understand that you don't have to just save in always constantly devaluing dollars, that there are other options, there are other forms of money out there. And then that kind of spills over to the gold is money too, and silver is money too. So I think crypto's great. You can really use technical analysis on it because it's such a small market.
Right.
So I own a little bit.
So they're going to start a futures contract at the CME.
That might be the end.
I tweeted, I was a member there, Craig, and I remember sitting before the membership committee, and they were all staring at me like I was a piece of red meat. We're going to be able to pick this kid's pockets. I think the CME wants to launch his contract because there are people licking their chops to short it. That dynamic has not been in Bitcoin. Right. It's been a one-way market. You need two ways for a market to gain credibility. And my last question is, the gold-silver ratio is at a pretty extreme level. You have a view on that? Do you think it'll continue to be extreme, or is this a good time to possibly think about being a little heavier in silver than gold?
This might sound heresy, but I think the gold-silver ratio is utterly useless.
Okay.
And the reason I say that is people look at it and they say, well, it's always been 15-1. You go back to the year 2000 BC, it was 15-1. Well, that's because that ratio was dependent upon how we priced it. We priced it off of physical, and there was supposedly 15 times as much silver in the ground as there was gold, so therefore it should be 15-1. But we don't price the metals off of physical anymore. We price the metals off of derivative contracts. And so when the ratio is 75-1, that tells you, to me, that there must be 5 times as much derivative and digital silver as there is gold at this point. Okay. And so I just, we price it off of digital, and it doesn't have any value to me, that ratio.
I learned a lot from you today, Craig. It really,
thank you. That's an honor. I appreciate that.
Normally I'll have a metal guy on, and their mantra is, don't wait to buy gold and wait. And, I believe that, no matter what happens to price, I agree with you. Everyone should have a little in a coffee can buried in their backyard and not give out their address. But really, thank you very much for taking time out of your day. And I'm showing your website here, the TF Metals Report. This is where you could keep in touch with Craig's views, and he has podcasts and chats and forums. So if you're a metalhead, and I'm not talking Metallica or Led Zeppelin, this could be a great place for you to do your intelligence gathering. So thank you again, Craig, for edifying our community in a very interesting area. Great interview.
Hey, it was fun, Dale. And I very much appreciate the kind words. That means a lot. And thank you. And I just would add, you notice like on that podcast there, it says Turds Vault above it. There's a component on my site, a paywall that's $12 a month. So it's not like a big, massive deal breaker. It basically keeps the light on and it keeps the trolls out. And so
good strategy.
So for most of the
trolls don't like to even retweet.
Right. And that
costs them too much.
Well, it's not like we're afraid to argue with them or make the point, or it's an echo chamber. It's just that when you get somebody in there just banging away with negative stuff, like on free sites, you can't have the conversations. You can't have the sharing of information because they sidetrack everything. So anyway, if you want full access to the site, is a whopping 40 cents a day, basically. And you can find out, you hit the register and there's a little video that tells you all about it. Anyway, we invite everybody to check it out. But Dale, more than anything, I appreciate the opportunity to visit with you. And again, I'm honored that you felt it was good use of your time.
Thank you so much, my trading warrior brother, my analyst brother. And really nice to meet you, Craig. I wish I hope your subscription base grows like a mushroom.
Thank you, Dale.
Really nice meeting you. Thank you for your time today. I'll put out this interview to edify the Twitter sphere later on in the day. Take care, bro.
Thank you. Have a great day, Dale.
Okay. All right, Face, that's it. Have a great day. See everyone tomorrow. Good hunting the rest of the day. For those that are subscribers, perhaps I'll see you in the other trading room. And most of all, don't just count your pips, count your blessings. See everyone tomorrow. Hope that we're adding value to what you're trying to accomplish as a trader. Adios.